For the first time ever since FTX collapsed, I'm really optimistic about crypto's future because I finally see like this mind switch kicking in.
These basic value propositions are still valid, and I don't think that it makes sense to look at the industry with like pure cynicism.
You had way too many crypto projects and they all earned like a salary. Like, who's going to pay for that? Where's the revenue generation?
How down bad do you have to be to cheat on your husband with somebody who's working in the Cosmos ecosystem? I mean,
yeah, we will see a lot of consolidation from whatever is left over. We probably coming back much stronger. That's like my take, and that's why I'm actually pretty optimistic and pretty happy about all of this happening.
GM, and welcome back to the Odyssey podcast and to another one of our roundtables. It's been a few weeks, Juri, since you've last been on, and you've made a little side quest over to Argentina, so very excited to hear all of your takeaways and hear about your insights from the conference. How was it? How did you like it?
Yeah, amazing to be back, and was very much looking forward to jumping on the show once again. Argentina was super amazing, and there are a lot of lessons that I have in my luggage, so to say, that I brought over the Atlantic back to Germany, and happy to unpack it.
Nice. Do you think that there was any leading theme of the conference? For example, like during ETH Denver in February, everybody was starting to talk about DeFi vaults, vault curation, vault infrastructure. Then during Token 2049, it was more institutional driven. Everybody was assuming stable coins to be now the default product that all of DeFi was to be centered around. Were there any of these leading themes, any very dominant topic over at Devcon this time?
I mean, we have to distinguish. I mean, it's at the end of the day, it's like not even Devcon was like Dev Connect. So it was like very developer heavy. So people there aren't that much focused on some sorts of themes. It's a very builder heavy event. It's not like East Denver where you arrive in the beginning of the year and after Messari published its top 5 crypto prediction for X or DY, and then all of a sudden all of the side events are themed that way in Denver. That's not the vibe of Dev Connect. So I would say obviously people continue to talk about stablecoins because there's like a very strong correlation with DeFi, and a lot of DeFi OGs were there. So there was like something, and also of course people accepted that institutions are here. AI agents was also a topic, but nothing major, I would say. People talked about the things that have been a topic throughout 2025 already. And yeah, the only thing that I would say changed significantly was people accepted that we are kind of in a bear market. So there was acceptance, but it was also very refreshing and beautiful atmosphere at the end of the day. I got reminded a lot of the good old 2021, 2020 days. It was much calmer, a much more stoic atmosphere, less hype, less noise, just very, very beautiful executed events, amazing people. And yeah, that was like the overall vibe. But people accepted that we are in a bear market and that things are going to change. Plus, and that's the last thing I want to point out, finally, I saw so much more people building apps and also apps being used. There was like this one, to bring up an example, there was this one application that was called Peanut, and this allowed you to pay with stable coins in restaurants all over the place. And a lot of vendors also accepted Peanut. So this was kind of cool to see.
So, given that we are both of non-technical backgrounds, how did you perceive the developer conversations to have evolved over time? I was only at one DevCon 3 years ago in Bogota, and I remember back then, of course, Ethereum was still by far the dominant DeFi ecosystem. It is still dominant, but by now it is an accepted fact that there are other L1 ecosystems and also very vibrant L2 ecosystems. Of course, they have declined a bit over the past months, and Ethereum has built out its dominance again a little more, but like Ethereum is not the only player in the game. And back then, 3 years ago, many of the technical conversations and the talks at Devcon were still on a extremely philosophical level that ultimately led to the ivory tower perception and also like allegations against the Ethereum Foundation and like everybody associated with the Ethereum ecosystem. How do you think this has evolved? Because on the public communication front of the Ethereum Foundation, I think we've seen a quite clear shift that they are more integrated and interacting with the applications that are being built in the ecosystem. They are more supportive and they finally accept that, yes, the primary use case for the technical infrastructure that we've been building is a financial one, and there's less of this ivory tower behavior. Would you say that has been resembled during DEFCON, or what was your perception there?
Yeah, I think you nailed it quite well. I think this ivory tower behavior is much weaker nowadays in the Ethereum ecosystem, which is an overdue development because if you just look at not price, let's ignore price, but I mean, who is building, like, there are not that many people who say, hey, let's build directly on Ethereum's layer one. But since a couple of months, people are also talking about scaling the focus to focus on scaling the L1 again, and this has led apparently to a big shift. So the entire Ethereum community is a little bit more hands-on, I would say. Plus, again, a lot of people have left the space throughout the past couple of months. So you got rid of a lot of actors, and now you basically get like back to the core of what made Ethereum so exciting for me in the early DeFi days. So I think we're really getting back to this meta where people are building cool applications directly on chain. There's like a stronger and clearer communication with the Ethereum Foundation. And another example for that, one of my closest friends, shout out to Xavier, who is running the Fractus Fund. He also hosted an event together with the Ethereum Foundation. And he told me that this was like something very novel because before that, there weren't any events, Ethereum Foundation X, VC, XYZ or something. That was like pretty novel. And I think that is beautiful to see. I think Ethereum is on a better way, not on a perfect way, I would say, because yeah, there's still some ivory tower behavior in the community. 100%. And yeah, also I think and this is like what I'm actually more concerned about is the Cosmos deification of Ethereum. This is what I really, really fear. Yeah, I mean, Ethereum is not in a place where decentralization, I mean, Ethereum is a decentralized ecosystem, but I hope that the voices become quieter and quieter in regards to we need to have everything super decentralized. I've overheard like discussions about, how to vote in which countries to host DevCon or DevConnect next. And I was like, guys, let's just host it, okay? Host it in a nice city that makes sense. And yeah, this Ethereum behavior, the super idealistic. I mean, it's nice. It also made Ethereum grow, but I think now that we are also heading into a bear market, we should also be a little bit more pragmatic, especially when it's about honoring user adoption. Like that must be the number one thing. This in the next couple of 12 to 18 months is like building out the right stuff to get more people on chain. That must be the number one priority. Because last cycle we just built a lot of infra and nobody's using it. It's a desert still.
To go on a very brief Cosmos-related side quest, did you see Steven's tweet about Cosmoverse 2022 that recently popped up on the timeline?
No.
So I'll see if I can pull it up in the meantime, but I generally think that CT sentiment might have absolutely bottomed this last weekend. I mean, I think it was on Saturday or Friday when I scrolled through the timeline, and I was just baffled. I mean, I genuinely resented my ability of being able to read. Like, there was stuff going on that was beyond what is acceptable, and I thought like this has such a very late stage crash out dynamic. You know, these narcissistic student representative kids from back in the day during like high school and uni, when they knew that
Mm-hmm.
their term was coming to an end, they would often like totally crash out because that was the only thing that they had in their lives. And I think we
Yeah.
are somewhat resembling this behavior on crypto Twitter right now, because so many people are coming to the realization, well, it might be the end for us as like an industry in isolation, and like all the achievements and all the technology that we've been building is just getting integrated into fintechs and into traditional finance rails, but we are not the ones who profit from that. And I think that a lot of people ever since October 10th have just been like slowly bleeding out because they blew up during that time and they haven't been able to recover, and sentiment is just so in the gutter. So let me pull up that tweet really quick, because like, I mean, it has somewhat of a sad backstory, but it's too hilarious to not be discussed. I think that is the like CT pasta of the year, perhaps. So essentially the whole thing started was by this like Asian woman complaining that they're on crypto conferences, she's like often getting hit on by men. And
Mm-hmm.
then Steven, who's a good friend of the pod and like long-term enjoyers of a DeFi dojo, he was commenting that he once met a BD woman at a like a business development woman at a conference, and she was like super excited to go, etc. And then like he didn't really know her, but when he was leaving from the airport, he met her again, and like she sat down next to him and confessed to him that she ended up cheating on her husband. And then like I read through the comments because I was like, who could that be? And then he wrote, true story, the worst part, it was at a Cosmos ecosystem conference. And then I DM'd Steven and asked him, well, was that Cosmos 2022 in Medellin? And he
Yeah.
said yes. And then he wrote like a more elaborate post over this and like confirming it was Cosmos 2022 in Medellin. And I DM'd him like the post mortem of Cosmos as an ecosystem is like 0 organic users onboarded, 1 marriage destroyed, and like that's all that is left of his ecosystem. Which I mean it is sad making fun of this, but I mean it is crazy that like the lengths that people go. And I mean, how down bad do you have to be to cheat on your husband with somebody who's working in the Cosmos
Yeah.
ecosystem? I mean,
Yeah.
good lord, good lord. Yeah, I think that's like that was the most like weird day on crypto Twitter, because basically the entire timeline was just full of people either quote tweeting or replying to that original post of that Asian lady there. And then the other half of people, like on that same day, there were probably like 5, 6, or 7, or even more people announcing that they were quitting like their C-level or head of whatever positions at like more like tier 2, tier 3 crypto companies, not like the super large ones, but the ones you've heard of and like who are relevant to the ecosystem. And I think that led to such a downward spiral of sentiment on crypto Twitter. Probably spent like 45 or 60 minutes doom scrolling, and I've never seen anything like that. I think the sentiment was much worse than during FTX. It was worse than during Luna. It was much worse than during October 10th. And I think that was quite a bottom signal, to be frank. I mean, I hope that like all of these people like either fired or quitting their jobs or like getting harassed or whatever are not doing fine. But I think like the necessity of turning this into such a public discourse is very indicative of where we are as an industry. Just to make the transfer over back to Devcon. So you mentioned that quite a few people were aware or acting like we are in a bear market. And I think like
Yeah.
if you're looking at weekly market structure, we definitely are. So if you're going just by market structure, by technicals, I think it is more or less confirmed we are in a bear market. I think there's enough reason to believe that this bear market will not be as severe as the last one. First of all, because on the fundamental side of things, we are seeing much more adoption of the technology in institutional capital inflows, in fintech integrations, etc. And also, we have never built up a comparable industry internal leverage and like degeneracy that we've built up in late 2021 and 2022. Like this time, there is no FTX around and there is no Luna UST around. Like there's nothing comparable that is managing a similar extent of capital. The only sort of DeFi-wide collapse that we've seen in the past months has been Stream Finance, and the entire whole of capital, so the capital that is missing on Stream, is close to 100 million compared to, I think it was 40 billion in market cap of Luna and 20 billion in market cap of UST. You cannot even compare this. There's no cataclysmic collapse. There's nothing. On the macro side of things, Powell will probably get replaced as a Fed chair in May 2026. And there's a very high likelihood of Trump replacing him with somebody who's very aligned with decreasing the interest rates of the Fed. So every sign is pointing towards more degeneracy. But yeah, like how are people thinking about the bear market? How were they reasoning about it? And how did you see it in people's behavior during Devcon?
So and so. I mean, I have friends working for VCs, and they, for example, are super excited about this period of time because I said in the past cycle, specifically in the past bear market, for me, it didn't really feel like a bear market, the last bear market that we experienced. Why? Because yes, of course, prices were down, but if I looked around, people earned the same salaries because they raised so much. There was still a lot of hiring going on. There was still a lot of raising going on. So there was still money in the market. And now it feels like, okay, now we are really draining out the entire liquidity that was still left in the market. People are getting off-boarded. This is a sign of a bear market. This is what I was like really, really missing in the previous cycle. None of that happened. And now we are seeing this. People are getting off-boarded. Liquidity is getting more and more constrained. And also the VC people I talk to is like, yes, valuations are much, 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 much lower, much more conservative. And this is exactly what we need. So on the one hand, people were like super pessimistic about that. Oh my God, will I have my job next week? Yes or no? But on the other hand, people are excited and basically saying, finally, nature is healing. And for me personally, this is why I am excited. For the first time in the past couple of years, I would say, ever since FTX collapsed, I'm really optimistic about crypto's future because I finally see like this mind switch kicking in. The questions that the industry is asking is way more critical, way more down to earth. And this was like an overdue development. So to wrap it up, on the one hand, obviously people were scared, but the majority of people were actually optimistic about the upcoming developments. But we will see a lot of suffering. Not gonna lie, we will see a lot of suffering. That's like maybe something that we can also talk about in a bit. We will see a lot of consolidation. Things will just consolidate more and more. Things will come together much tighter, much closer, and then we will see from there. And then, yeah, is from whatever is left over, we are probably coming back much stronger. That's like my take, and that's why I'm actually pretty optimistic and pretty happy about all of this happening.
Yeah, I find that to be quite an interesting perspective because I've perceived it from the very opposite end. I mean, I was not at DEF CON this year, but just from the discourse on CT and some discords and some Telegram groups that I am in, it's more that we have started to not believe in anything anymore. I think one of the key differences between right now versus the start of the 2022 bear market is that even until the collapse of Luna, the kind of adoption of DeFi, the degeneracy in yield farming, and kind of the tendency to be more delusional, to dream bigger, to like increase the visionary outlook for the industry, that all went up even until Luna collapsed. And also, if you look at the VC funding trends, all of this continued to climb and rise into the millions and like valuations often in the billions. It just continued to climb up. Whereas now, if you're telling me that like at the very start of a bear market, VC liquidity is already drying up and people are getting laid off again, I think that is like something to be at least somewhat concerned about. I mean, it is a healthy correction
No, not at
in the
all.
way
Not
that
at all.
it's probably getting more.
Not at all. Sorry, but I have to intervene. Like, if you are in the normal startup world, and I think like crypto was like entirely in bubble when it comes to that. Just like, I don't want to point fingers, but when you're in Berlin and you go to like a lot of these crypto startups, like, it's not comparable to how Web2 startups or AI startups work, or how
No,
the crypto industry used to be. It's more like,
I think we
yeah,
actually
they
have too
like
many crypto.
exactly. You had way too many crypto projects and they all earned like a salary. Like, who's going to pay for that at the end of the day? Who is going to pay for that salary at the end of the day? Where's the revenue generation? And that's like the one thing I talked about revenue generation in 2023. Like, I asked this question and nobody really had an answer for that. And it was more like, yeah, revenue. And I mean, I remember, yeah, I want to point that out. There was this one very good friend of mine who developed a project, an NFT project in the Cosmos ecosystem. He tweeted in 2023, and I agreed on that back then, was, oh, IBC needs to figure out a way, or like the Cosmos ecosystem generally needs to figure out a revenue stream, something like that. And Zaki Manian retweeted that, quoted it with, this guy is a factory of bad takes. And now all of a sudden, all of the Cosmos people come out and say, oh, now we should think of revenue. And I was like, yeah, dude, but that's a little bit too late right now. I mean, just imagine this. From 2020, I looked these numbers up, and I think we talked about this in the show already. From 2022 to 2023 or something, the Cosmos Hub was spending, I think, $250 million for security. And these $250 million were paid for stakers, for validators, and these validators, gigantic teams. So of course you needed to pay this, but these people were employed, these people all earn salaries. So if you just look at this small sector, like the revenue generation chain does not add up because someone needs to pay for it at the end of the day. Or you do it like inflation. And this was like most of the industry, it was just Fugazi, it was wash trading, it was massaging numbers, or pure inflation. This was what the industry was built on, and nothing more. This is what happened in the past couple of years, 1 or 2 years. And now all of
Yeah.
a sudden, we see this doesn't work anymore. We chop heads off, if you want to break it down like that. And people are like surprised, oh, why is this happening? Like, dude, we lived in a bubble for 2 or 3 years. The wind already changed, but we, played our Fugazi game a little bit longer. And now, oh wonder. Why, like, also like Celestia
Yeah.
laying off a lot of people. Why is this surprising? Why is this surprising? I like this.
Arguably on the
I just want to point out, I like Celestia tech-wise and a lot of bright minds there, but yeah, I mean, yeah, what happened in the past 2 years? There's like adoption-wise, somebody needs to pay the bills. And finally, I think crypto's waking up and it's like, hey, yeah, someone needs to pay the bills.
Yeah, I think that's an interesting discussion that we are leading up to. Also, when it comes to the debate around layer one valuations that has been coming up again and again over the past 1 or 2 weeks over on crypto Twitter. I think Hazib from Dragonfly and Santi from Inversion Capital, they are like the main drivers of that debate this time. And if you look at the staking infra and broader proof of stake economy, it is all a derivative of the layer one valuations. And I 100% agree that while also during 2022 and 2023, many of the application side projects, which had usually lower valuations than infra projects and raised less VC rounds, you saw a little bit of a downturn, even going into 2024 when the bull market started to pick up again, where some of them stopped working on their projects, or they did a major pivot, or they merged with another one. And still, all of these infra projects, they continue to grow. And whenever you looked at like cryptocurrency jobs or like any of these crypto job sites, it's always been a disproportionate amount of job offers coming out from like infra providers, from foundations. And it was always somewhat surprising to me, how were they able to finance themselves? I mean, the applications are at least able to like generate some revenue. Basically, all the revenue that the layer ones generated, it all went back into staking rewards, or it got burned, or like it got outpaced by staking rewards. So in of themselves, as a business, they were never profitable in some sense. Also, their labs entities and their foundations, they were just living off of huge foundation grants and a large chunk of the total supply of the tokens. On that note, it's kind of funny that like for pretty much every terrible take or like bad development in crypto at large, you're able to pull a quote or a tweet from some of the Cosmos people, like you just did with the
Yeah.
revenue quote. And like the whole zero organic users onboarded, one marriage destroyed. That really is the post mortem of the entirety of Cosmos. It's so funny because the discourse we've had within that ecosystem back in 2022 and 2023, it was always ahead a few years or a few months of what went over to Ethereum and the other ecosystems. Like the intellectual debates being held in Cosmos were never stupid in the sense or irrelevant in the sense that they didn't apply to any other ecosystem. But
No,
both the
if
conclusions
I
that were
can
taken from these debates and
can I
also
just add something
the
to that?
lack of actions were just like always on the wrong side.
Just one thing, because it's like exactly what Ethereum does with this ivory tower behavior, just that Ethereum at least had liquidity and users and traction.
Mm.
And Cosmos that did the same thing, sorry to interrupt you, in 2022, 2023 was $50 million in liquidity, but they had the best tech. That was the pitch, at least.
Well, on the point of liquidity and layer one valuation, was that a topic that people discussed during Devcon? Like, if I mean, obviously, you have a very strong bias towards like ETH focused or ETH maxi people at DEF Connect because it is, after all, an Ethereum conference. So, was there anybody talking about that debate? Anybody arguing for layer ones, including Ethereum, to be repriced lower, or what was the sentiment regarding this question?
I would argue if you have like a basic understanding of economics and finance, there's not really debate or discussion around that. I mean, just look at the things how they are. You have layer twos on Ethereum. Yes, they have traction. Solana has traction. Hyperliquid, of course. BNB, mainly through Binance, right? Maybe Sui a little bit, but that's it. If you look around all other chains, which ones have, which are relevant right now? Very, very little. Yes, one here and there. But I mean, look at the Monad launch. I mean, people just accepted that there are way too many chains, way too many chains, way too many networks, and very little usage. You don't need that. You don't need that many chains right now. The meta was in 2021. We experienced it. Okay, there was a scaling issue, and all of a sudden, people built so many layer ones, layer twos, and whatever. But now, ever since basically the bull market returned, yes, like price wise, but not traction wise, not adoption wise. Yes, we somewhat figured out scaling, but now there is not much to be scaled for because the demand is not there. I would argue if you would have like all of this infrastructure already in play, right, in 2021, that would have been a different story. But that's not the case. The adoption didn't keep up with the infrastructure that we built out, with like way too much infrastructure and too much dead land. And this dead land is all powered by pure inflation.
For 2026, or like pick any time horizon that you like, would you be willing to put on a long BTC, short ETH, or like a basket short of like various layer ones trade?
I'm always long Bitcoin, to be honest, just because USD is devaluing, everything is devaluing, and I see value in Bitcoin because there's no POS implemented, so there is no direct inflation that could harm the product itself. And what I view, and I still view it like from a very basic perception. Okay, if everything goes down the hill and I need to leave, for example, Germany, and I would need to leave all of my assets, all of my luggage here, I just can't. Just like I'm now, I just need to leave now with my passport in my hand. I can't bring any other assets out of the country. Bitcoin would be an asset that I could leave the country with because Bitcoin is somewhere on the internet in that sense. That being said, I'm still a Bitcoin bull, so I'm always long Bitcoin by holding it. But yeah, with regards to your second question, like I wouldn't bet on any altcoins in the next couple of
No, but I mean
months, for sure
that is
not.
the question. Like, would you be put on a pair trade of long BTC and short layer ones?
Yeah, I would know what layer ones I would betting on to go down.
Which
Yeah,
ones?
but I can't say this because obviously I'm also a little bit where my hands are a little bit tight here because I'm still also like representing Strike here somehow. But I would say personal opinions are my own. I would know projects tokens where I would do that. But on the other hand, yeah, I mean, I don't do shorting. Like it's not something that I'm very interested in. I just hold BTC. This is what I'm convinced of, and what the others do. Yeah, let's see.
Yeah, I think it's an interesting trade, and I definitely agree that it makes sense. Yet, like, I think it kind of depends on your general market outlook. If you think that we are now at the start of a bear market, maybe see a recovery rally back up to 105 to 115,000, but that this recovery rally for BTC will ultimately put in a lower high, that over time, when you think that recovery rally is coming to an end, and you expect the bear markets to like happen going forward, let's say for the coming 6 to 12 months, or like pick your desired time horizon, then I think it would make sense to bet on BTC as your long leg and layer ones as your short leg, because traditionally in bear markets, everything that is not BTC has underperformed, and BTCD has been going up. Frankly, this bull market, so to say, of 2025, BTCD has not dropped a lot. If you're looking over at BTCD, I think it peaked in June at 66%, and the low of this cycle was in September at 57%. So it didn't even drop, at least measured in absolute percentages, by 10%. It only dropped from 66 to 57. And right now we are back at 59. So we've kind of been ranging and like slowly climbing up again ever since September, around when Ethereum peaked, like slightly above its old 2021 all-time high. So first of all, like layer ones underperform during bear markets, and now you have a combination of BTC being treated as a separate asset by institutions from the rest of crypto. I think that is a narrative that we often talked about during last cycle in 2021 and 2022. And now we finally come to a point where this is reality. So I think that overall, I think that is a healthy sign of maturation in the industry, because frankly, the bet on Bitcoin as a system hedge and digital gold is a very distinct bet from like Ethereum, Solana, and like all the layer ones and the applications as crypto infrastructure and like stuff that is being built on top of crypto as an application. I think yes, they are both like blockchain assets, just like Amazon and Apple are both tech companies, but like Amazon is like a marketplace, Apple is a producer of hardware. So I think that like they are operating in like a distinct environment, even though they are both considered tech companies in the broader sense. So I think it's a healthy development that these are getting separated a bit. And now you have that combination of historical underperformance during bear markets, and you have that whole discourse coming up where we are treating BTC as a different asset now. For BTC, the consensus is okay, this really is an outlier type of asset. There is no reason to even approach it by valuing it with cash flows because it doesn't have any. It's a commodity, it is digital gold, and you basically have to value it on like a vibes based mixture of your outlook on geopolitics, your outlook on monetary policies, on fiscal policies, on nation state adoption, central bank adoption, etc. And like that's how you form your BTC thesis. And all of these institutional and like more sophisticated players have come to the realization that for Ethereum, Solana, and all the other layer ones, and for the application based assets even more so, it doesn't make sense to value them purely on a like commodity basis or on like a store of value basis. I mean, Ethereum for the 500 to 1000 DeFi farmers left is still a monetary asset. Similarly, for Solana, for the between 50 to 100 active meme coin traders left is money. For everybody else, it is not like money first, it is not store of value first. It has some commodity esque aspects because it is used to pay for gas fees, but like you cannot put it into the same bucket as BTC. And I think it's a very healthy development that the market has come to a realization of that. So now what is the most proximate way to value these assets? The most proximate way to value these assets is to just use the tools that are already around in traditional finance and start to value it based on cash flows, price to sales, price to earnings, etc. So first of all, now you have the whole problem of, well, there's not really any individual legal entity behind these assets that you own. Like there's no Amazon company, there's no Apple company that you own by owning Ethereum or owning Solana. So like what do you actually have an underlying claim for or claim against in that sense? Not really anything. And then if you look at the cash flows, if you look at the money flows that be like proxies of generating revenue that you can measure by fees or like real economic value. I think that's the metric that Blockworks research came up with over the summer. Well, you will compare it to like other tech assets and you will come to a realization, well, if we're going by price to sales or any of the alike ratios, these things are extraordinarily overvalued compared to like any other high growth tech asset. So I think it's much harder now, both from an individual investor and from an institutional perspective, to make a very bullish case on Ethereum and Solana as an asset. I think on the ecosystem side, it is the polar opposite. Like pretty much every single day, if you're following like all the news channels on Twitter and Telegram, like Ian's Intel, Zoomer, like Walter Bloomberg, etc. Pretty much, I have all of these on notifications. Like pretty much every single day, you are seeing news announcements of like Stripe, some bank, some government agency regulating whatever. Like all of these things, all of these developments, we could have only dreamt of in 2021 and 2022. So I think on the fundamental side and on the adoption side, by fintechs, by TradFi players, it is looking better than ever. So there is growth in the
But are
ecosystem.
they really using the ecosystem,
Well,
or
they
are
are
they
using
really a
the
part?
technology, but they are not like the value does not
Yeah.
accrue to the underlying token. It accrues to the fintech player or to the TradFi institution that is now saving money or is now able to sell new financial products
Yeah.
to their.
And when I hear this, I immediately think of sorry, I immediately think of Cosmos. Yeah, everyone is using your tech. Yeah, everyone is adopting it, but
Oh man, it's like
someone
this
needs to get
episode
paid.
really is like an all roads leads to Cosmos.
Yeah, someone needs to get paid. I mean, water is wet. if you work in the industry and you basically build out a nice standard with everything, for example, let's just take the EVM as an example. Here's Stripe uses that EVM. Yes, it's nice, but if they don't pay you for using the EVM, then yeah, you did some nice work for Stripe without getting paid. Yeah, that's it. Congrats. And now?
Yeah, that's basically what Hosip from Dragonfly is trying to argue against. So his case is that, well, yeah, all of these L1s have gotten a lot of hate, but the conclusion or like the core argument he's making is, if I understand that correctly, this is a hell of a long essay.
Mm-hmm.
It's that it doesn't really make sense to value or aim to value these things based on traditional ratios. But if you keep in mind the exponential growth and the like total size of the blockchain industry and like all of the value flows, payment flows, etc., financial interactions and other like social trust interactions that will be settled on a blockchain down in the future, that justifies a like similar or higher valuation of these layer ones than we currently have. And I think, well, it's a very noble argument to make, but again, I think it is like hard to have such a conviction into this thesis because again, who is your marginal buyer? Like if you want to believe in this thesis, you I think also have to believe that, well, there are other participants, particularly the large institutions who now start building on this network. They also have to consider it worthwhile wanting to own a part of this network. They cannot be satisfied with just using the technology. They cannot be satisfied with just either making more money by using the technology or saving money by using the technology. They also have to own it. I think that is a necessary condition. And I mean, I think right now you can make a case for either side. I mean, Tom Lee and the like ETH DATs, it's not that they're at the brink of collapse, but it's not like there is an unlimited appetite from institutions to own ETH. Most of them are on the more cautious side and say, okay, if it makes sense to build on that technology, we'll just build on it and like use some EVM based chain like Plasma or Stable or Tempo, which is associated with one of the stablecoin providers. And like among these stablecoin chains, I think there are now like 5 or 6 of them that are around or like to be launched over the next few months. And like that is even more value that is not going to directly accrue back to Ethereum or Solana or any of the other ones. So retail has completely pivoted to sports betting or 0 day to expiry options on Robinhood, and institutions are adopting the technology more than ever, but there is no causal connection of value flows back into these underlying assets. So that is kind of what Santi is arguing. Let me see if I can find his post. He's more arguing that, well, we have to get away from the illusion of thinking that these things will just be valued because we want them to be valued, and that this network premium being ascribed to them beyond anything that is justifiable with typical financial metrics, it's cool to have, but right now there is no marginal bidder for all of this.
Yeah. Yeah, 100% agree. And I just ask myself, like, they're coming with up with this now. Like, yeah, I don't get it. Like, no shit, Sherlock, is when I hear this.
Well, I think that even among the more financially savvy people in crypto, there still was a widespread consensus that like ETH deserves a special place and also that Solana deserves a special place. Obviously, Solana didn't deserve a special place in the eyes of the ETH maxis and vice versa. but I can't find the Santi tweet. But essentially, he's not necessarily arguing the opposite of Hazib. I mean, in the long term, Santi is also pretty bullish. He's talked about his thesis at length in the latest Empire, like by Blockworks, the podcast roundup episodes. I really recommend listening to these if you guys are interested in that topic. But yeah, I mean, he's also bullish in the mid to long run. So he's not a pessimist. He does not think that this is an unsolvable problem. But he argues in the short to midterm, there's very little argument you can make for being more bullish on these layer one assets in relation to BTC. So yeah, I think it's a interesting time in the market. And speaking of like the consolidation of valuation, that will also go hand in hand with the consolidation of businesses. So what I've heard from you is that A was quite a key theme over at Devcon. So maybe we can dive a little deeper into that.
Yeah, 100%. So, I mean, a very good friend of mine who's also the co-founder of Areta, which is one of the largest M&A banks in the industry. And they also just advised, I think, like CoinMina on an acquisition of Paribu, which is the largest exchange in Turkey. So there's been another like major M&A deal. And if you just look around, there's so many ideas being executed in the industry. And that's like also like a thing that we need to take into consideration for like all of these L1s, because all of these operators have like relatively high, basically salary sheets, right? Because if you want to hire an engineer for taking care of your service and stuff like that, these people are, yeah, mm, highly educated people. So they won't work for you for like 10K a year or something. You pay them a pretty decent salary because, I mean, how many people are that knowledgeable about engineering and crypto and all of these things? Like these are super high specialized people. And somebody, and that's what we talked about earlier, somebody needs to pay them. And we see that more and more operators run out of business because prices go down, inflation is too high. Yeah. And these operators run out of business. So what we will see is that there's like still still enough revenue to be made, but now it's all about, okay, are you on the right side of consolidation? That's the thing. And I think this is like what we will focus on now is to see, okay, which operators are here to stay and which ones. Yeah, will have like a big issue. We're seeing, and this was like my panel at Staking Summit, is that we are seeing the great consolidation. Because yeah, we will see a few operators, but on a more professional level, but you won't see these validator sets with 200 validator sets, with 220 validators or something. I think this DPoS style is just not sustainable at all. I mean, you know it from Cosmos, right?
I mean, I
And
think
this is what we'll
there
see.
can be networks with like 200 or more validators, but like it doesn't make sense for these validators to employ 3 people. It essentially has to be a one-person company of like one guy who does it as a hobby with like DevOps
Yes,
experience,
but
and
that's
that's
like
about it.
that's the issue. That's the issue. So if the chains also want to make sure that these are like sophisticated, decentralized networks that basically get supported by sophisticated operators. If you want to be a sophisticated operator, you need to pay like, I think like, I don't know what the ISO 27001 license costs, but let it be like 20K or something. So then you first need to buy like a license to basically get taken seriously, to also have people stake with you other than the foundation. So if you want to like enter that game and receive enough stake to sustain yourself, you first need to put like AK on the table just to get that license. And then you also need to have like a sophisticated setup for that. And most chains, if you don't merge all of your chains that you support on one server, usually you pay like $300 for a server per month at minimum. For heavier chains like Solana, Sui, Injective, Walrus is insane. It's like much more. So you need to at least make a couple of $100 at least for even like a chain that is like less heavy, does not have that many transactions, therefore not that therefore not that much traction. Even if you would support such a chain, you would need to have at least a couple of $100 in revenue. And if you then really want to make like a net win for your time, compensation, and so on and so forth, you need to have like another 100 on top, and then it only makes sense. But as you can see, there are not many chains that generate these rewards. So we are seeing this consolidation right now because you need I mean, of course, you could run everything super cheaply on a couple of servers in 1 or 2 regions around the world, but then I mean then our industry would be super fragile. Then you could attack out of these chains very easily because you would just need to figure out, okay, where are these servers and who are these people? And if it's like one-man shops, difficult.
So where or in which sectors do you see most M&A happening, or where do you see it likely to happen in the future, except for the validator and like proof of stake space? Like one sector that I've been always pretty curious about is like all these very niche and small scale data businesses where it is kind of unclear how they make money. Maybe they are selling access to their APIs, but essentially there are maybe, let's say, 10 different data companies. Let's exclude the block explorers of every chain for once. Like the likes of Blockworks Research with the data, DeFi Llama, Nansen, Arkham, Messari, like all of these types of businesses. I think there are quite a few more, but I think everybody gets the direction I'm aiming at. These have relevant like customer groups. They usually have a paid plan in a subscription model that is working very well. But when there are these websites with like some very niche type of data, which sometimes are accessible freely, sometimes like are selling API access, sometimes are only accessible with a paid plan. But that, for example, is one sector where I always thought, well, it doesn't make sense to have 100 different providers. Like if I have a bookmark folder in my Chrome tab with all of these crypto data providers, from a user perspective, it is super annoying to remember what type of metric is available on like which of these 50 different data providers. That is a sector that for me, where I think that revenue is spread quite thinly, that also you need a BD person, a legal person, like an ops person, data science people for every single one of these. So I think that most of them are not profitable unless they're operated as like a side project or like a hobby and like don't need anybody responsible for BD and distribution and sales. And it's just like somebody who basically built it for himself. But that is a sector where I always thought, well, it would be needed here. And another sector is all of these DEX forks or like lending protocol forks on smaller ecosystems where, they basically do not make the revenues or do not have the unlimited VC funding to sustain like a team with executive firepower themselves, and where it might make sense for them to be scooped up by another larger entity. I think for the latter ones, it's more difficult because there, again, you have the token and like labs entity or legal entity separation. And for that, you might need to wait for a framework, what either Mia Hedge with Street Foundation is working on. They're working on the ERCS, so like ERC security framework, or what Dimitri Back the Bunny is working on with Cemetery.io. We had him on the pod sometime during early summer, and he's basically tying the token to like a Delaware corp where it is not treated like an equity, but at least you have shareholder and like M&A rights. So you would be able to scoop up some of the token and either like conduct like mutually agreed on a transaction or also a hostile takeover. So which one of these sectors around in crypto do you think that M&A will spread over?
Yeah, I mean, as you said it, everything that's related to data and infrastructure, even though I would say data is also somewhat infra, because for most chains to retrieve all of this data, you need like RPC nodes, which is exactly what we are seeing. So yeah, predominantly that, and the rest will actually just sunset. Like, I don't think that we will see like much M&A activity with lending protocols or like DEXs that you mentioned, because there's just no traction. Why would you merge that? Also, like, in order to merge something, you require money. Then the question is, okay, does that actually make sense? I think we will see more sunsetting, and all of the things that are still profitable, they will merge. I think there are a couple of lending markets where it makes sense. DEX not that much. But I think what we also see is like with custodians. I see custodians merging. That would also make a lot of sense. And just because it's very expensive to run a custodian, and you need to be like super big if you don't want to just get eaten by the big banks, so to say. So you need to be like big enough to make the next big step. And obviously that's also something that M&A people love to do, is that they merge a lot of stuff to make it so big that that these are like serious actors. So to make basically the pie so big that it's like very hard to remove. So I could see that everything that's like custody related. I also think centralized exchanges. We have seen it with Coinbina and Paribu. So yeah, also on that angle, like basically all of the businesses, they will merge that are profitable, and all of the protocols in some exotic networks, they will just sunset. That's my guess.
No, I think that's a very reasonable outlook. I think that on the forked protocol, or just like very standard protocol side of things, where you have a DEX, a lending protocol, or like even some of the perp DEXs, which are unable to sustain user and like volume, like there's not really any bullish case to be made to acquire them, because maybe less for the perp DEXs, but for the very basic stuff, there is no proprietary intellectual capital or intellectual property that you can acquire with them. It's basically open source forked code. The liquidity on these things is not very sticky, so you're not acquiring any network effects. I think, on the other hand, for the chains that are established now, like namely Ethereum, Solana, maybe you can try to make a case for Hyperliquid there as well, and maybe for Base. I think these are the four relevant ones. Maybe BNB chain, even though I don't think that there's a particularly like innovative ecosystem. But I mean, with Binance as its associated entity, they definitely have a relevant backer. You could say something similar about Tron, even though I do think that Plasma, Stable, Tempo, and like all of these stablecoin chains will make the dominance of Tron when it comes to stablecoin payments more and more fragile. And like, other than that, there's really nothing of value accrual happening on there. But I think for these established ones, you can make the case that, okay, regardless what happens, unless this capital flows back over traditional finance, it has to stay somewhere within crypto. And if it stays somewhere within crypto, it is probably going to stay on these chains. Like, it doesn't really have anywhere else to go. And I mean, there are enough good reasons to at least keep some of your capital stack on chain. Like, I would not personally want to have all of my money on a bank account. And I think, like, if you look at geopolitics, if you look at capital controls happening all over the globe, I think that's a very reasonable stance to be had. And I think these very basic, these very like OG value propositions of crypto, of being the in sovereign control over your own money, over your own wealth, that still holds. Nothing has changed about that, even though we are complaining every day that we basically turned the industry that was supposed to build the future of finance and like revolutionize all of money, that we basically turned it into a 24/7 casino. These basic value propositions are still valid, and I don't think that it makes sense to look at the industry with like pure cynicism. So I do think that like you can use that to at least be a little more optimistic when it comes to the select few of the layer ones, like namely ETH, Solana, maybe Hyperliquid, maybe Binance Smart Chain. But yeah, interesting times.
Yeah, I think so too. I think I think it also doesn't make sense to be like super super pessimistic, but I think we're on a good path now that we are like removing a lot of stuff.
Yeah. Any other weird side quest topics you observed over at Devcon? Anything unexpected?
No, actually not. It was everything as expected. Yeah.
Nice. Was great catching up. We are about to hit the hour.
Yeah, overdue. Yeah, overdue to catch up. Overdue catch up.
Absolutely. But it was a good one. I mean, sentiment is bad still in the industry, but I don't think that there is too much to be worried about. Yes, it leaves you with an existential crisis every other week if you want to like keep all of your eggs into one basket, both like investment wise, also career wise. But I think we also tend to exaggerate to the downside. So I think like if you're reasonably smart, reasonably ambitious in life, this industry is probably not going to like kill you or anything. Like there's a positive outlook to be had. There's a
Yeah.
positive path going forward. So yeah, I think it makes sense to still stick around a bit. Maybe like if you feel uncertain when it comes to your like personal income or whatever, I do think there is a case to be made that you should diversify away from the industry at least a little bit, because I do think that the risk of crypto as an industry disappearing is a real one. Like the technology will not disappear at all. The technology will continue to get adopted. I'm more confident in that than I ever have been before. But in terms of like DeFi existing as an industry, like that is not to be taken for granted. I've used that example quite a few times, but it's like if you're a restaurant and you're now using like offering a online menu, you're still a restaurant. You're not an internet company. And if a restaurant is putting their menu online, or if a hotel is putting their booking system online, that doesn't accrue any value to like any internet protocol. And I think we are at the risk of a somewhat similar development in crypto and with the L1s. I don't think it will play out the exact similar way because you still have like a base network assets for all of these L1s, but there are similar dynamics for sure. And I think it makes sense to be like a little bit wary of how everything goes, but no reason to be super doomerish.
Yeah. No reason to completely exaggerate. Yeah. Agree.
Very nice. Was
Amazing
great
chat as
catching up,
always,
Juri.
man. Yeah, thank you so much. And I guess then I talk with you next week with the last episode of the year as we're heading into Christmas.
Probably. I mean, I hope Owner will be back from Solana Breakpoint by then. And
Mhm.
yeah, now I think that's actually a good sequence of roundtables because now we've kind of discussed the state of Ethereum and like EVM in depth, and next week we can do the same thing for Solana. So very much appreciated by the very esteemed foundations to put their blockchain conferences right after each other.
Yeah, also not a consolidation thing.
When Cosmoverse merge with Devcon?
I don't know. I mean, I'm not part of the team anymore, so luckily.
Well,
Amazing. Then
all roads leads to
see you
Cosmos.
around.
See you around, man.
See you around.